So I was just doom scrolling through a couple of fake traders I know. There's a lot of fake traders out there, fake Betfair traders. So, it doesn't hurt to sort of see what they're up to every now and then. See if they release anything game-changingly bad, that is, and see what they're talking about. Yeah, so I was going through a couple of them, and then I came across Trading the Market. Trading the Market is one of those Betfair traders out there who, talk about these stupid strategies where you place a bet at some point in the exchange, you lay your back here, and then within like a certain time period you cash it out, or on certain market conditions within the game, just stuff like that. And they're pretty, for the most part, none of these strategies work, and they're all a bit nonsense. This video here by Guru Busters, I'll put it up somewhere here. I'll leave it in the comment section down below, the description I should say. I'll leave it there, and yeah, he pretty much debunks everything that they stand for. Regardless, it's not an attack. This video is not an attack on them. It's an attack on their most recent video. This awful software they've made. So the recent video here is Newcastle versus Man City. 10 million simulations reveal the true outcome. Now when I saw this, I thought, oh, interesting, right? It's playing on the sort of Monte Carlo views and things that we adhere to within sports betting, where we like to run a lot of simulations on certain things and predict how that might pan out in an upcoming event. And Monte Carlo itself is just a really helpful way of simulating a game or an event using markers, stats, data, analytics, things that we have available to us. Monte Carlo itself is something used within sports betting as well. If you have an EV percentage, an edge in the market, and use certain stakes, you can simulate how that would pan out using a Monte Carlo simulation and find out whereabouts your bankroll would end up using the variance that the Monte Carlo simulation depicts and displays. Really helpful in that sense as well. So yeah, Monte Carlo simulations and simulations in general are just super helpful when it comes to sports betting. But Trading the Market, I found a way to get it completely wrong. With that being said, I'm just going to start the video. I'm going to go to the main parts and the interesting parts of this video.
The simulator uses a multi-layered predictive engine that merges historical data, dynamic performance indicators, and opponent-specific behavioural patterns. Every variable is dynamically weighted with adaptive scaling that adjusts for recency, volatility, pace, defensive shape, and contextual match factors. These weighted inputs are then processed through a protected probability framework that models scoring likelihoods, concession profiles, phase of play transitions, and momentum-driven variance. The engine performs thousands of micro-adjustments to correct statistical noise while reinforcing meaningful long-term trends. The final output is stabilised through a proprietary harmonisation layer that balances short-term fluctuations with long-range expectations. Put simply, we take huge amounts of data, run it through industry-protected calculations, and convert everything into realistic probabilities.
Alright, so yeah, he talks a big game, innit? And on the surface, they all sound like useful things that you might want in a simulation. And, there's talk about corrective things and things that you'd use in actual statistically significant modeling and simulation. The only issue is, I assume you'll find out that this simulation is so off from the actual result, or not result, I should say, the actual data. So off to the point where I felt a compulsion to make this video. It just clearly ignores the markets, the exchanges, what all models, all simulations, any sort of data crunching to do with sports betting. You must recognize the market. Exchanges are not stupid, alright? The most syndicated, genius, complex money is on exchanges and on Pinnacle. And if your model spits out numbers that are so far off from what Betfair is suggesting on high limit Premier League TV games, alright, on the over-under market as well, not even a derivative prop market, I'm straight unders. If you're that far off from those type of markets in terms of probability and odds, there are some serious issues going on, and you cannot ignore that, and you certainly should not be selling it to people. You're just very off. Maybe someone could find a way to incorporate market odds, what the market is saying, with what their simulations are providing, but I just wouldn't do that. They're just so off, man.
The simulator does the brain melting maths. You just get clean, accurate predictions.
He just said clean, accurate predictions. Brother. Bruv, alright? It is not accurate, and we're gonna find out why in just a bit when he gets into it. But my god, you cannot be claiming all that, man.
Now we have the results, let's break them down. Match results. City to win is 65.19%. The draw is 21.61%, and Newcastle to win is 13.2%. Both teams to score, yes or no, with 58.09% leaning strongly one way. The double chance is a great snapshot for traders who like to keep the risk low and pulse rates normal. Overs and unders, every line from 0.5 up to 5.5 shows what percentage of results landed over that goal total across all 10 million simulations. Want to know how often it hit over 1.5 goals? Just look, 7.2 million games did. 10 million simulations can all be wrong. What should you actually do with this? To identify value. These simulations show you where the true probabilities lie. If the market price doesn't match them, congratulations, you've just found value. The calculation for value on probability is 1 divided by the percentage. On the City match result, this is 1 divided by 0.6519%, which gives us a price of 1.53.
There it is, man. I mean, do you know how inaccurate that is? He's claimed the fair odds for Man City to win is about 1.533 recurring, something like that. It might seem reasonable on first glance. You know, Man City are probably better than Newcastle. I don't think that's controversial. However, guess how wrong this guy was. Not once throughout the entire opening of this market did Newcastle Man City game ever trade below 1.9. Right? So this guy was saying 1.53 fair odds. And the true fair odds, as represented by Betfair Exchange and Pinnacle, was never below 1.9. I refuse to believe that he believes that there was consistently 30% EV on a money line on a Premier League game that was shown between two really big teams as well. I mean, I don't buy it. Do you buy it? And he's calling it accurate, or some other buzzwords he used, really selling it. It's just so off. Alright, if a software is telling you that there's 20% EV on exchanges, on the money line, on high limit, really significant games, there's issues, man. That is not normal.
With one simple click, you can now see all the value odds and know if you're getting a good price or getting shafted by the bookies.
Okay, so the over-under markets that the simulator popped out, it said about 46.52% on over 2.5 and 53.4% on under 2.5 on this game. Now that would imply a XG of about 2.54 or 2.54, which is what this top commenter said actually. Yeah, if you just do a reverse Poisson on these statistics that this has pulled out, you can find out the XG data for these games, and the actual XG of this game was roughly about 2.93 which is so bad. You as a software, as a system, a modeling system, a simulation, you should not have an XG which is 0.45 or whatever above the actual XG. Alright? The 3.0 XG that I stated, I quoted, is reverse Poisson of Pinnacle and Betfair data. It is not what was decided after the game. It's just a representation of what the efficient market had indicated. Yeah, the trading the market guys have got this completely wrong. It shouldn't deviate from the exchanges and from Pinnacle by 0.5 or 0.45 or have on a high limit Premier League game, right? That is just so bad, man. I refuse to believe that these guys are shifting the narrative that there was 20% EV, 30, 40, whatever percent EV on these high limit games, not only on the money line but also over under markets. And I'm pretty sure because of this really harshly inaccurate weighting, it would also be implying that there is a ton of EV on the correct score markets, on both teams to score, and on double chance. In theory, there is no reason why you couldn't be a millionaire, a billionaire by using their statistics and their softwares. This most certainly wouldn't need to be selling this at £12 a month. It was spitting out 25-30% EV. And I mean, yeah, if you're getting that much EV, there is literally no excuse why anyone would be poor. Because you can just get you can even start off with a small bet. Put down £1, it'll turn to £1.30. Put that down, turn into £1. bloody 70, and then it can become millions in a very, very quick time if you have access to that much EV on exchanges, on sharp markets. Pinnacle, alright? It's just insane to me that they're able to sort of sell this, and people will think that there is genuinely that much value sitting on the exchanges. Exchanges are really, really tough, and it's very, very hard to find any value on them, let alone 30% EV on a Premier League moneyline market, or a 1x2. I call this, they're money lines to me. Yeah, maybe to you might call them just a win market, a result market. Maybe money lines not the most accurate thing I should be saying. However, my point still stands. There is not that much EV in these markets. And if anyone's telling you that there is, they're either like a quant level genius and they have found something that no one else is seeing, or they're a charlatan. I'll let you decide which one the guys behind trading the market are. But yeah, I mean, they're really able to use all these buzzwords and appeal to what is appreciated within the betting scene, that being simulation, and sort of turn it into something inaccurate, that being what their software is producing. And although it's only costing £10 a month, and although you are betting into an efficient market, losses won't be that bad. I just still think it's so epistemically hurtful and harmful to say that what they have is accurate. It just don't sit right with me to see such misinformation being put out there. If you like these guys, all the power to you. And yeah, I think watching that Guru Boss's video is going to be super helpful if you have any inkling of doubt against me. To watch their video and you realize what these guys are on, and they're not on a good thing, man. But yeah, that was just a brief little video. When I saw just how bad it was and how inaccurate it was, I just felt a compulsion to make this video. Other than that, don't leave these guys any hate, just don't give them your money. And if anyone says they want to give them the money, tell them not to. But anyways, yeah, that was the video. If you did enjoy this video, please do like, subscribe, all of that fun stuff. If you disagree with me, or if you want to think my video could have been made in any other way, I'm open to feedback. Just comment it down below, and I'm willing to improve. I'm looking to improve. I think it would be very good if I could have access to knowledge that would help me improve. But with that being said, I hope you enjoyed this video. I'm going to say it again, I hope you did enjoy. And yeah, have a nice day, and just remember that markets are very efficient, especially exchanges. So there is not value just sitting there doing nothing. It might be in niche markets, but that's for you to decide.